Hey, what's good, squad? Welcome back to another video, bro. Uh, Today we're gonna be just doing a little weekly trade recap. I'm not saying everybody trade this way. I'm not saying you have to. I'm not saying everybody trades different, bro. But I'm just be showing y'all what I do. I want to say I only traded 3 days this week. I only took trades 3 days this week. I did not take a trade Tuesday and Thursday. You guys will see why. I will explain it. Firstly, here's an uptrend. Simple, right? We are trending up. This point is higher than this point, or this point is higher than this point. We come down. This down move is higher than the first move. Then we come up higher than the second move. Come down higher. We making higher highs and higher lows. Simple as that. Same thing if it was on the other side. Lower low, lower high, lower low, lower high, lower low. Simple, right? Now these are just simple structures of uptrends and downtrends. This is the only way that the market can move. The market can only move up and down. But we can also do a combination of these, which is called consolidation. So if we start doing this, that is consolidation, right? As you can see, we're not going in any specific direction. We are going basically sideways. Like we might be going sideways, right? And then it might come up above, but that next move doesn't stay above this the move that brought the higher high. So that's basically it. Oh, I do want to touch on one more thing too. Let's say these are hourly candles. So let's say that this is the candle we're on now, right? Then this next candle opens here, comes down to here. This wick comes almost perfectly down to this first candle's wick. So when this happens, this is basically telling me that candle would be red right here. So this is basically telling me that at this point, price is balanced, because we hit this point in the first candle, right? Then we did whatever in the second candle. Then we're coming back to that price, and then we're pushing out of it. So especially if this is on a higher time frame, this is usually what happens. We start here. This is where the candle opens. We come down. We balance price in the zone. Then we push out of it. That is simply what it is. And the way that I like getting into my positions is either, depending on where we are in the market, at when I look at the market or when I get on the charts, depending on where we are, this is basically how I like getting in. I'm either targeting this area to balance price, or I'm waiting for price to come into the zone and then go with the trend out of this. Right? This is Monday. This is our new week opening gap. So basically what a new week opening gap is, this is when the market closes on Friday at 2 p.m. Well, my headphones just died. God damn. If there's like big news or a lot of money going into the market over the weekend, there would be this gap in price. Okay, here's a clean chart. So look at this. This is from beginning of the month. So we've been pretty bearish from the beginning of the month. You can see that we've been in a downtrend. You can see that we've been in a downtrend. We're coming down more than we're coming up. So we are going to, based on the higher time frame, if we are already in a zone that should be making price to go lower, we're not going to be looking for bias in this zone. basically. So like right here, say we've been in this 4-hour downtrend, right? And then this candle comes up right here, and we hit this fair value gap right here. Boom. We would not be looking for buys in the zone unless we have, like, we come into this gap right here. Then that could be a reason to maybe take it to this zone. But me personally, I wouldn't take this any farther than this, because price could easily just reverse off of that. So since we know we're already inside of this 4-hour gap right here, we're not going to be looking for longs inside of 4-hour gaps. We're not going to be looking for longs past a zone that we would target. So this is somewhere that I would probably have targeted somewhere lower. Oops. Well, where I did target somewhere lower. Since we're not taking this higher, I can look for something lower. So once I see this consolidation, this tells me that, so basically there are buy and sell orders right here that are making price just go up and down, coming back into the range. This is telling me that I can take price lower. So what I like to do is I like to look, especially once we are in this consolidation, I usually drop down to the 5-minute, the 15-minute. I look for a retracement on those to balance price. Most of the time I look for it to balance price. And then I look for a 1-minute continuation out of that. Let me tell you why I didn't take a trade on Tuesday. So Monday we were bullish, right? So I am looking for price to continue this bullish trend. I see that we are already inside of this gap. We're already inside of this hourly gap. At 6:30, I'm looking for price to go higher right here. This is why I don't take the trade. I am off the charts by 8 o'clock. 8 o'clock a.m. 2 hours after market open, or an hour and a half after market open, I'm off the charts. The longer you stay in the charts, the more likely you are to take a bad trade. That's why I only give myself an hour and a half. This keeps me from just being on the charts all day, bro. If you're on the charts all day, you are very likely to lose all your money. So I see we're already in this gap. That already turns me off the trades. That's the only reason, not the only reason, but we did not get an immediate move out of this. I would have liked this candle right here to show me that we were going higher. I could have took a retracement to take it higher. That's simple. So Wednesday we created an hourly gap. Boom. We are in bullish structure, right? From the beginning of the week. We have a high, we have a higher low, higher high. Now I can look for a higher low right here. Just because we're in this up move right here, right? You want to wait to see what we do out of this, because even though we had this really big push down right here, we could have just as easily, you see this right here, right before market open. This is why timing is also important, because we come into this hourly gap right here, we wick it once, wick it twice, then we could have just continued this going up, and I would have looked for a continuation out of that. We did not. Instead, we hit this gap, we came up, didn't come over, then we just started dropping at market open. This is where that next gap was for price to want to go there to balance, right? To balance out. So if I see us moving past this low, we're disrespecting bullish fair value gaps for us to go higher. I can only expect us to go lower. And then if I see the lower time frame also following that, I have no problem taking a trade lower. So as we can see, this is our hourly gap that we're targeting. You can also see that we have a 5-minute gap that we're targeting too. but we just barely tapped into it with this. Sure, that was on the 15 too. Yeah, we just barely tapped into it. I don't mind targeting this still because we have the higher time frame showing us that this is also a gap that we didn't tap into on the hourly also. So I see that we drop off all this. This is a 5-minute candle and we drop off, where's my tool? 100 points. That is a lot of volume for us to be moving. So I would not expect this next candle to come all the way up to balance price to take it lower. There's just no reason to even think that. So when I took this, I was looking at my higher time frame, scaled down to my lower, looking for a retracement on the 5-minute. Seen this, I seen the candle come almost back to where it opened at. That's telling me that we're probably going to keep going lower. Then once I got confirmation on the 1 minute, this displacement candle, stop. I got this displacement candle and I put my stop loss at this 5-minute high right here. Cause if we're gonna go higher, bro, we're absolutely gonna go into this gap. So there's no reason to even target this gap. If we're gonna go higher, then this right here, like the two candles that started the drop on the lower time frame, I'm not gonna have my stop loss way up here. Cause if we're gonna go up, we're gonna hit it anyway. Cause we're either gonna come to this gap, right, to go lower, or we're gonna go to this gap to go lower. Almost a 1 to 2, 1 to 1.75. All right, man. Here's Thursday in this column right here. Oh, this is why I did not take this trade on Thursday, because we had this hourly gap, and at 6:30 we were already inside this gap. You can see that on the hourly time frame. This is that 6:30 candle. If you look on the 30-minute, you can see at 6:30. Look, we come past that hourly gap, then we flip, damn near come past this this higher or this lower high up here, and then we come down again. This is not something that I would have wanted to take, because we did balance this hourly gap. But this is the only time frame that we did that on. 15, we did the same thing as the 5-minute. We just came up, didn't fill. We filled these gaps, but we also closed over them. I would have expected us to just, at least if we're gonna go lower, to make just a wick right here inside this 15-minute gap. Friday, last trading day of the week, we have this huge sell-off right here. Now this is showing me that we are keeping this higher time frame bearish trend going. Closed over this giant gap right here in the Thursday, but this is where I messed up. This could have been the cleanest, I would say the cleanest trade of the month. It was very clean. Asia session, you can see we come down. Asia and London, we come down, right? So we sweep out this low right here, a higher time frame low at that. I think this is a daily too. Sweep out a daily, sweep out a 4-hour, 1 hour. That is the last low that we have until where we have no other gaps to fill. No other gaps on the 4-hour. And I would guess that there's no other gaps on the 1 hour either. These would just be daily wicks. Especially since you can see where this candle opened at. We can see we came down. This blue wick right here, we came down, swept this, and then we immediately ran back up almost to where we started that hourly candle at. Because you can see that there's two big gaps right here. So what price is doing right here is just going back and forth, filling orders. This is where we don't want to be. We don't want to be inside of this. We want to be somewhere where we have a definitive direction, which would be this candle. You can see this 5-minute candle right here. That is showing us a clear direction that we are moving up. Or what this could have been was this 5-minute. Once we get this candle right here, this consolidation could have bled into this 15-minute. We'll start consolidating on the 5-minute, and then here on the 15-minute we'll be doing the same thing. So I didn't really like that we opened this blue candle here. This next candle came down, wicked, and we didn't close this next candle bullish. Oh, I think this is what I took right here. I think I put my stop right here. And I already knew where my target was also. This is our Asia high. Here, 5 to 10. This is our highest point. This is another high liquidity zone. And then this is also a 4-hour high right here. A 4-hour high going into a 4-hour fair value gap. A very good place to target. I just did not have the patience this day. This is not the chart's fault, bro. This is completely my fault. If I did not have the confidence to take this, I should not have taken it at all. But once I took this loss though, bro, I didn't keep trying to trade. Because if I would have, bro, look at this consolidation. I would have just been getting chopped up this whole time and lost my whole account. Once I seen, I don't remember. Somewhere in here, see, this is terrible. Somewhere in here, I took a trade. Don't even know where. And then I locked myself out for the day. But this is another zone that you can see where price balanced itself out on the 15-minute time frame. And I was watching this too. After I locked myself out, I was just looking what the candles were doing, because I had a really good feeling about this trade going to this 4-hour high and this Asia high. Definitely. So as you can see, I only took 3 trades this week, bro. You do not need to be trading every day. If you see that conditions are not in your favor, do not trade that day. It is very simple. It's very simple. The whole point in doing this is to keep your losses low, bro. I should have just it should have just been a day that I didn't trade. But guess what? I learned from that now. Now I know that I need to be a little bit more patient in my trades. And that's okay, bro. You want to be learning this whole process. If you're a beginner, bro, you are learning. The learning does not stop. You are learning yourself. You're learning how the market moves. You're learning what makes you make bad decisions. Because I know what makes me make bad decisions in the market. Most of the time, it is because I'm exiting my trades early, or I have too much size on a trade. And why am I doing this? Why am I exiting my trades early? Because I don't have the confidence. I don't have the confidence in taking this trade because I haven't seen enough confirmation to think that it's going the direction that I think it is going in. I'm exiting early, getting back into positions, exiting when it goes against me, and then I'm losing money every single time it does that. So I've definitely limited my limited my trading to, I told myself max one trade a day. Most of my winning trades are the first trade that I take of the day though. So this is just showing me that second, third, fourth trade, I will usually lose those trades. And I can only see this because of my journal, bro. Like every single trade that I take, I write down. I put a picture, I put the reason I entered, I put my setup, put how much I was risking, I put things I could have did better, things I did that were good. And bro, I go back usually at least once a week. I go back and look at all my old trades that I was taking. Keeping it simple, bro. It's really just keeping it simple, bro. And if you don't simply see it, simply get off the charts, my nigga. it's really it's shit. I do want to start going live though. So if you guys do want to see some live trades of me, just seeing what I do in the market, win, loss, break even, it don't matter. I think I do want to start doing that. So y'all let me know if y'all want to see that. That would definitely be fun. I just be hella tired in the morning, bro. West Coast trading is terrible. What I usually risk on my accounts is $400 each. Bro, if I have 3 accounts and I'm risking $400 on one of those accounts, right? You have a max drawdown of $2,000. So that's 4, 8, 12, 16, 20. 2,000. So that has given me 5 trades to lose in a row for me to blow those accounts. And the longest losing streak that I have had is 3 days. And that's those 3 days that I showed y'all. It was like 2 or 3 videos ago. Just the daily consolidation. That was those 3 days in a row that I lost. I'm gonna have a whole video on my risk management rules. Yeah, that's pretty much it, bro. I'll catch y'all in the next one.